Vincenzo's Go Crypto Investing this April the 8th, 2025, daily noon cryptocurrency and XRP and blockchain gold and silver bullion update. And remember to join the hottest growing, fastest moving, top crypto insider and influencer on social media that's brought back truth, trust, education, and information to maximize your trading and investing because you are informed and not being preyed upon and paid upon off your emotions and being emotionally manipulated by the shysters, heisters, and fleecers that are out there. And one of our members, the Jabroni Killers, as you are the most important part to help share this message, subscribing to the channel. Yes, become members of Jabroni Killers. In the video description or the pinned comment, as we have close to 30 new members. We've just breached 2,000 subscribers on our way to 10,000, right? We had a Jabroni Killer member request the NASDAQ 100 be put into the rotation, and to look at the NASDAQ for the first time. We have a brief chart. We haven't looked at this, but you can see we've been in an ever-ending, never-stopping bubble, Fed-induced by the Federal Reserve, by artificially keeping interest rates lower and creating new money and injecting new money into the supply, and that pumps the stock price, the assets, right, the housing, the real estate, and all that kind of good stuff. But you can see when we were back in the tech bubble, back in late 1990s to 1999, 2000, when it popped, we had a big crash, right? And then we started the QE Unlimited. They didn't have a name for it back then, but now it's called quantitative easing, and it's unlimited because we're in like the 6th time we've done it. And you can see in our 2 yellow circles down here, bring that into the full screen, our 2 yellow circles that we had down here was a 50-something% drop, capitulation. These were the last 2 times in the NASDAQ 100. And the monthly time frame, I know we usually do the daily and the crypto, but in the stock markets, because they're much longer markets and they're much slower, we use the monthly. The last time we've hit the 200-day moving average in the monthly time frame was this bottom, the double bottom, the first one from the tech bubble and the second one from the financial crisis and the housing collapse, right? And both times the Fed came in the capitulation area where the price would have kept diving down farther and farther and farther. They started printing money. And they've held suit ever since to just print money anytime you have any kind of retracement in the stock market, because they would rather see people's wealth on screen go up, even though the nominal value or the real purchasing power of that new wealth is less than if you didn't have that new wealth to begin with. But people like it when it looks good on the screen because it makes them feel good because their bank account shows money, irregardless as if you're buying less and less stuff with the money that you have, right? But you can see those were the last 2 times we hit it, the 200 and the monthly. And then the last time that we hit in the monthly, the 50-day moving average, was back here during when they tried to raise interest rates after COVID right here. You can see 2021 from December of 2021 through January of 23. They were raising interest rates, so the stock market was going down because higher interest rates are bad for stocks, right? Because it makes the businesses more expensive to do things. It restricts the money, less borrowing, less spending. So it went down, and then we hit off the moving averages for several months. And then towards the end of this, as we were riding in here, they started saying, "All right, the next year, we're going to start to think about maybe talking about maybe." pausing the rate hikes and then lowering rates, and that's what happened from that point on. And you can see the stock market went up. Now with the recent dip down, and we're about to hit the top part of this yellow trading zone, which is a fixed volume profile. A lot of trading took place in between this, and it just so happens the 50-day and the monthly is sitting right on it because the tariffs have caused a sell-off. But this would be a technical level in and about right around the 16,000 and change, or the 50-day moving average in the monthly time frame would be a time that you would think you would see at least a short-term bounce. Still don't want to buy you, and you're bearish just like the tariffs with that advertising. You would think there would be a bounce in the NASDAQ 100. Maybe for the first time, just like crypto, you're coming on a major support level. You would think you would see at least a brief bounce, and then we would see what happens. Or if it had a brief bounce, something like that, came down, maybe it come up to the uptrending 100-day moving average in the monthly time frame. But anywhere between these two, the 16,000 and the 12,000, you would think you would see a nice bounce, but you would think you would see one on the 16,047 or the top part of this yellow trading zone, right? So that's what we're going to watch out there. The stock market is all pump induced, and anytime there's a threat of a correction where you get a bear market or on the verge of a bear market like you are now in the S&P, the Fed comes to the rescue, right? So we'll see what happens this time, but I would expect nothing but the same. The Bitcoin price, you can see we did, I believe, maybe just above that 73,811 target that we had, which was the top of that left shoulder. And we told you we were coming down here for several weeks. We're about to have the golden bearish cross, where you can see now the 50-day moving average is sitting just above the 200-day, which is trending down now in the Bitcoin price because we've had sideways to down consolidation. We had that big fall down yesterday and Friday, and then we had a rally towards the mid part and the end of Monday. And you can see it had a nice bounce just above, but pretty much on our level that we've been talking about, and we did meet that. Then we had the slight return rally. Now what you could see here is a double bottom potentially, and then we'll see if it wants to rally back to the upside and maybe move towards, let's get that off there, maybe move up closer towards that falling 200-day moving average at $85,000, or if it's going to come down to this double bottom and dip below it before it tries to come back up and maybe confirms it as a neckline rejection, similar to what we're going to take a look at in XRP where it's at right now. But you would expect at least some fight here at a major trading level at 73,000 that we're on. You would expect a couple hits on this, maybe a brief rally back to the upside. I wouldn't think you would get higher than the 200-day moving average at 85,000 in the daily, but eventually we're coming down to this $58,000. If you look at, we're going to steamroll through some of these because it's just the afternoon update. Similar to what's going on here. You hit this major 25.5 cents for about a month and a half when we've been talking about, and especially the last 4 weeks, all the bouncing that it was doing off of it because it was a major trading area. But each time we would tell you, the 50 to the 100-day moving average in the daily were likely as high as you were going to get. And that's about all you did besides a brief wick right there on when they had that manipulated news. And we've been telling you we were going to come down, and we've been telling you we were coming down all the way to this 18.5 to 18.75 cents. And you can see where we're at now on the wick yesterday. Before we had a technical buyback, we got down to almost 20 cents even, and you would expect now a comeback and a back test, and then the overhead moving averages would meet up there at about the same time in the daily. You can see at 28 cents is the 200. We're almost at a bearish golden cross at 28.75 cents is the 50, and then you come down and you hit and confirm on this 18 cents, right? Followed by maybe a rally, and then eventually I think you're coming down here to 14.5 cents in the XLM, followed by maybe a bigger rally, but that's for a little bit later on into the future that we're not there yet. The same thing with the XRP, that we've been on top of this. We were industry first mover advantage, and it's the value and the reason you should become members of Jabroni Killers. We let you know we were in this head and shoulders topping out reversal pattern. I was going to say that's the old one. Way back here, just like we identified that COVID head and shoulders reversal pattern, we identified this in purple just after. You can see the mini purple inside this yellow head and shoulders just past the 340 mark, and we drew this pattern before any of this. All of this over here in that box, none of that was there when we drew this head and shoulders. That was all the future, just like May, June, July is the future now. And you can see what happened was we drew the pattern up beautifully. We identified a neckline at 209. We identified that this is what we were in, gave you the first mover advantage. We told you as the pattern became apparent, which it did when it was forming this right shoulder back here, that the mainstream and the social media influencers that are just there to manipulate and prey and pay upon you, your emotions, to make you make an irrational decision and confuse you and give you news when it's too late. We told you they would catch on and then act like they knew it the whole time, and now across the sphere they're talking about it, but they still don't understand that we're coming down to $1.29. We told you we would break this neckline. We identified this false pump beautifully that Sunday morning when they dumped that news with the Trump Bitcoin or crypto reserve or Bitcoin reserve. We told you that was manipulated news. The same as when the Fed kept the pause, and then the official end of the case as the appeal was dropped on the same day. We told you that was also fake noise and the price was coming down. We came back and hit that neckline again for the 4th time in a month, and then we breached it. Told you we were going to the 200-day moving average, said we would have a golden bearish cross, said we would have a bearish cross. The bearish cross is about 24 hours away from happening. Then we told you there should be a bounce somewhere near the $1.94, and you can see the wick in the daily came much below that as we came down to about $1.61, but we wicked back up to the 200-day moving average, a spot where we told you we would. And then what you would think you would see now over the next few days is now a back test, which you're attempting to do, where you trade up. You could even come all the way back down for double bottom, then you come up for the back test, but you would think you would see a back test on the neckline now, and it would use it as resistance, just as the overhead moving averages are just above the price. The 50 and the 100 would come down and crash upon it, and that would be another driving force that brings you down to this technical target of $1.29. Very proud of the way we did that analysis. We've been out ahead of it for you for 3.5 months. We've been continuously telling you what was going on there, just like with the Bitcoin and just like with the XLM, and we feel we've had the best analysis in the whole sphere during the whole bull market bubble, blow off top, not bubble, but blow off top, euphoric state of affairs that was going on. But we kept it straight, kept it super simple and easy to give you the information, the education with the trust and the truth that you needed to hear to keep you well informed. And you haven't been surprised by any of this. We've been expecting at some point, you can see we're still attempting to break out of this falling channel. It hasn't yet, but at some point AMP will break up. It's trying to do it, but we'll have to just keep paying attention to see if it does it. Hbar did wick below that 15.5 cent target, which was our double top target from back here. Another first mover advantage in the value of Vincenzo's Go Crypto Investing. We identified that mountain double top, or as some like to call it, the M topping reversal pattern, because it looks like an M, but it's a double topping reversal pattern. You can see technical target got you down to that 15 cents, and now we finally hit that 15 cents the last couple days. We thought there might be a little bit of a bounce because it's a technical bounce area. You're about to have the golden bearish cross, what we would expect off this 15 cents, which you wick below it, a flash wick below it, a slight buyback, these overhead moving averages, but the golden bearish cross hit you, and that's too much overhead pressure and sell pressure, and then it'll drive you back down, and I think you're coming to 0.0942 cents. Like, subscribe, and share. I got to do my side job when I get out of this job, so the next update will probably be around 9 p.m. tonight. Peace and love. Well, Jay, you haven't told us the weather conditions. Well, it's currently a very chilly mid-spring afternoon. Beautiful sunny skies with the mid-spring blue in the background, but a chilly 36 degrees. Peace and love. The Rock's Eyebrow, Jay.